Hi there, thanks for coming to this 5-minute class. I'm Jennifer Croft and I'll be teaching you how to forecast cash flow. So if you like this class, we have a bunch of other classes and free resources available at www.5minuteclasses.com. So let's start with the definition of cash flow. Cash flow is the amount of money that flows in and out of your business. And what we're going to try to do is forecast that and forecast that accurately. And if you're reluctant to do this, don't be. You're going to have to take guesses, but believe me, all kinds of business owners from small to large are doing this right now as we speak. And even huge corporations will forecast cash flow. As an example, if Starbucks wanted to forecast cash flow, they would go to each individual store and ask them to make projections about sales and expenses, and then they might aggregate that into projections for the region or the state or the U.S. And a lot of times you'll even see with large corporations that even though they made profit in a given quarter, their stock actually went down. And this is because they forecast that they were going to do better than they did. So all across the world, people are making these forecasts. So don't be hesitant to put some numbers down to paper yourself. If they don't happen, it's not lying. You just were off, and hopefully you'll get better. The more you do this, the better you'll get at forecasting it accurately. So here is a very, very simple example of how cash would flow in and out of a business in a given month. So we're going to give you, as an example, a starting cash balance of $5,500. You then made sales of $12,000 for that month. Your cost of goods relating to that sales, I'm just putting in here at a 25% rate. So your cost of goods was $3,000, and that left you with a gross profit of $9,000. From that gross profit, you need to subtract your overhead expenses. These are also known as fixed costs, and this is your rent and utilities and vehicles and so forth. And so that, if we take your gross profit minus your overhead, you ended up with $4,000 as a net profit before taxes. You now need to pay taxes, and I'm using a rate here at 40% for most small businesses. This is actually fairly accurate, as depressing as it is. And so you need to subtract that 1,600, and that would then give you a net profit after taxes of $2,400. If you, as the owner, then took a withdrawal of 2,000, the net cash that was added, or it could be subtracted, but in this case it was added. The net cash that was added that month was $400. So your beginning cash balance was 5,500. You added 400, and your ending cash balance was 5,900 at the end of that month. So here are some ways to permanently improve cash flow, not just temporarily improve it, but permanently influence it. And that is, there's four ways. You can bring in more money and you can spend less money. And by bringing in more money, you'll need to either raise your prices and or sell more. And to spend less, you could either tackle that number that's cost of goods, try to get that down, and or you could try to lower your monthly overhead expenses to reduce that number. So those that I just mentioned would help permanently improve your cash flow. Ways to temporarily improve it, if you just find yourself in a bind and need to temporarily improve it, is you can change terms for how clients pay you. You could make them pay you quicker, including you could even potentially collect a deposit or prepayment from them before you start work or deliver products. You can accept credit cards. This helps you get the money in faster a lot of times. Or you can get a small business loan or a line of credit to help ease a cash flow crunch. You can also affect this on the other side, which is how money is going out of your business, which is you can lower your inventory by buying less supplies and materials or buying in smaller quantities. You can go back to your vendors and ask them for more favorable terms, have them let you pay later. You could renegotiate the terms of an existing business loan, stretch it out so that your monthly payment isn't so high. You could postpone any large expenses that you were thinking of going out and buying something. You can postpone that. And as a very last resort, you could reduce or postpone your own owner's withdrawal. So these are some next steps you can take that relate to how to forecast cash flow. And these are some worksheets that'll be really helpful for you to use when you're trying to come up with these numbers and projections. And finally, we also have a free newsletter you can sign up for. And in the meanwhile, thanks for coming to this class and best of luck with your business.